Hey, good morning. Good morning, my neighbors. Welcome to another episode of BYTTT. Before you take the trade, this is your boy JD the Great. Got a lot that I gotta cover with y'all. Oops, let me fix that. Let's put you over here where I can be able to see that and that. But yeah, so got a lot that I want to cover. Some of the stuff is the things that I kind of told you I was going to happen with some of the tickers, and some of the impact that's going on in the market and its whole. Don't forget to hit the like, subscribe, and the bell button. That way you can know when I am online. Make sure my camera is kind of centered. There we go. That looks a little better. Don't forget to hit the like, subscribe, and the bell button. That way you can know when I'm online. And down below in the description, I have my one-on-ones. It's already on and popping. So I want to thank all those that participated. It does end June 30th before I go on vacation. All right, so let's go ahead and get this party started. All right, so this is our chart. We covered quite a bit of stuff here, and you already see that the market's kind of just going directionally for the most part. Hold on, let's get these all fixed, right? Going directionally for the most part. So let's start with NQ, and we'll clear our lines and start this party over. And you can kind of see, I really thought when 2 days ago when we dropped, we was going to go ahead and get to these gap, maybe get to the 50 EMA, but the buyers are really buying up the dip, and it's pretty strong. So I got to give them their props on being able to hold this up. What we didn't do yet is take out any of these highs from early February or all-time high over here in December. So the question is this what they're aiming for with their setup? I can get rid of this alert. Bye bye. And we'll see what happens there. So this is oil. Oil, I'm not going to get rid of the lines here, but you already remember how we kind of broke down some of the stuff that happened here with oil. Let me get rid of these though. I don't need them. We closed under here. We closed under it. And again, the only reason we closed under it is because the first reaction by the market is usually a knee-jerk reaction as they try to assess, are we really going to be hitting these points? Are we going to reverse this? And to be honest, I think this is the next line of them understanding when we do get to this point. I won't need this alert right now. When we get to this point, does this mean that there's going to be a monster move to the upside? Because you got to remember, we're coming from negative barrels for a little bit, which again, I don't understand how that works. Um, I feel like there was some rug pull in there. It's my opinion. Um, or and are we going to go ahead and start attacking these pivot points that created this downtrend? Now they've broken downtrends, but never attacked the pivot points like this one, or this one. That brings us all the way back to like 2023, and this would just mean more expensive gas prices. And oil usually stays because of government subsidies and everything else, and negotiations and wars. Gas usually stays, or oil, I should say, usually stays in a little bit of a range and doesn't really go too far. But for some reason, this looks like it wants to do a breakout, and this breakout will be something massive. I think we're in this very forever young consolidation between here to here, which brings us to about the midway point, probably about here to here, a little bit lower than that. Get rid of you. I'm still putting it where I don't want it to be. Let me just draw one line. So here to possibly, I would say a little bit higher, probably by here. So I think between $42 and 106 per barrel is what we've been playing this dance with. And of course, this spike here, this was housing bubble. This here are recovery cycles. This here was when the Fed was raising interest rates. This here is the pandemic. This here was the recovery of the pandemic. You can kind of see how the story goes. You got pending housing bubble, spike up, housing bubble bops, made everything drop, devaluated, recovery, it gets high. It gets high where it's uncontrollable, then it stays at a certain normal level for a little bit, unless there's some type of catalyst like interest rates or anything. And then you got another extreme come in, pandemic, recovery, too far. You get your two extremes, and then inside the middle is what's your normal price. So I do think that the normal price is probably going to be like around 72, 75. Always having a discussion with some people in the community. They did like a chat GPT of trading or whatever. The mean is like 78. So I think it's somewhere around that ballpark. Here's gold. Let's go over to the daily. Don't need to do that. Get out of there. All right. Here's gold. Massive fall off in itself. Came back to one of my micro trends deviation. Seeing if we can hold. So far holding. We'll see what the New York session carries for it. And if we can get a nice little solid retest for some of these areas here, we can find out how much sellers are existent in here. But I do think that they're trying to attack some lower lows down here. I don't think they came down here for a vacation. I think they came for the long haul. I won't be surprised if I see gold get to here. 3358. Yeah, especially with the stochastic being where it is now. All right, let's keep this going. You already know this is silver. Silver took off. Silver is one that you want to kind of consider charting at all time. They have been in opposite spectrums recently, so I think people are investing into silver, removing their money from gold. British pound looks like this, and it's working its way to continue to the upside. This one is going to let us know how our market's going to move, because this usually put pressure on the dollar. Right now it's a little bit consolidated on the higher point, but that is all that's there right now, with a little bit of a bearish divergence, so don't do too much with that. Let's see, don't need this alert anymore. This was over Sunday. ES is actually having its challenges here. Now the difference between ES and NQ is that ES is inside of its fair value gap that was back in February. Its December sell-off was kind of like equal highs across here. So I think if ES gets above here around that 61 all-time highs, it's probably going to drag. Excuse me. It's probably going to drag NQ onto the upside. Let's see what they do when they fill this gap. That would be about 61. Oh, wait, did they fill it? I don't think they did. 61.11. We got a 61.09. We got 2 points away from it. What it do, Rod? Good morning. And then they rejected. So probably something along the lines of that is what they're looking for. And then we have ourselves Russell. They gave a lot of this back, but they came for the fair value gap. This was the play on Sunday, and when they got to this level, they rejected, and you can see they're trying to use that support. See if they can get back above 21.50. I think that's what they're looking for. And then last but not least, the infamous dollar, and we are under the $100 mark for a little bit. I think there's a level down here that they're looking for. I want to see this get into that 97. But again, a nice little retest, retrace up to here will be good because we can determine how much of the market is going to give back. And if they give key levels of support back in that process of re-establishing and resetting the dollar, there's a possibility we won't make any more lower lows, which means the market could probably drop. All right, so we kind of covered all of that. Let's go ahead and get this going. This is the economic calendar for today. In 19 minutes, we are going to have retail sales, and those retail sales will have an impact on how we move throughout the day today. Kind of recap what we discussed before. I apologize, but yesterday, there's a reason why Thursday we don't have any news because it is Juneteenth, and with Juneteenth, they front loaded everything instead of making it go on Friday. They have it all on Wednesday. So we got jobs report just coming out, oil inventory, FOMC decision, projection, and also press conference all in one day. Put that on top of quad witching. You're talking about probably one of the most volatile days out of all, period. And let's see, this is Thursday, nothing except European stuff, and then Friday is just Philly information. I don't know how it affects the market. Usually Friday news doesn't really do too much, but again, we'll see how the market reacts to it. All right. So let's go ahead and look over these commodities and look at some of the ranges that we put in during the Asian session. I'm going to drop down to a 15-minute and look over those. All right. So this is Monday. And the funny thing about the one on Monday, I really was going to play that one, and I was like, okay, I'm a little fatigued with the market because we had our pop. I did decent there, but then we just kind of zigzagged the whole entire time, which was a little disrespectful. So I just said, you know what, let me just sit back in case this is going to be part of that zigzag some more. It did not. It finally caught some legs, but then you can kind of see we stayed in the middle over here as well. So there's going to be some movement coming. And then this is your London session. And then since we don't have this current one, I'm going to do yesterday's opening. I did it backwards. Get rid of you. And you could kind of see we're still in New York sessions range in the middle of this. So this is going to be very interesting on how the market reacts to that, even though our current London session was trying to drop below it. They used their support, reversed it, and then they're spinning the block back up. Kind of looks the same on ES. Let's go over to oil and get those levels. Alright, so we got oil here. That was yesterday's. Alright, let's see, where are you? Like either a contract expiration. Yeah, contract expiration, there we go. So a lot of this drop is contract expiration, which usually tells us a lot of the story. Everybody's going to reposition themselves, but that contract expiration is saying that they anticipate in the future that it's going to be lower than where we were from there, and I think they are right. They recovered the missing volume from the expiration, and that's where we are today. They really are reloading over here. There's now twice. One on the Asian, and we're sitting on top with the London, and the London is trying to get above here. I'm going to anticipate some type of rejection is going to be happening here. All right, let's see what's going on, Gold. Well, good morning. How you doing? All right, so we got Gold. There it is. And that's our New York. Okay, this is our Asian for last night or yesterday. Get there. I want you to be in your position. Still don't think you are, but we'll fix this first. Asian. There we go. I think how it is. And then the last one is London. All right, and that is our London. Interesting. Let's get rid of this line so we don't add any confusion. Kind of like dancing along this trend line, and we're on a lower register. It could New York session really put a lot of muscle behind this because I got a lot of accumulation that looks like it's happening here, and it's probably going to give us a nice little push up. Um, I did say at 30 some change, 34, 33, 50 down below, but it's just not having no follow through on this drop. Nice rejection on yesterday, but could they be building up and kind of like rounding this bottom all the way back up? Don't need this alert anymore. We'll see. Yeah, actually, you know what? Hold on. Let me look at gold some more. Let me come to the weekly. Let me see what could they be building at the weekly? Okay, so we have Juneteenth. We have contract expiration. He said to the moon. Yeah. Well, that's the funny thing about it. Let me go to the daily real quick. I'm thinking that this trend is going to break because it's such a short term move. But if I squeeze this chart a little bit, I would say they're trying to put in a bearish divergence. So maybe one more spike through that doesn't have any follow through. What level is close by? Let me see. Maybe a bearish divergence off of 3600, 3650, somewhere around there. Very possible because of how that 15-minute looks. It really looks like accumulation. Kind, you know what? You know what? It kind of reminds me, Rod. If this whole thing right here, when they did this whole dance, was this an order block? Are we sitting here? And when we look left, an area of support, an area of resistance. Let's see this price action here. Try to use as support, stayed as resistance until they'll build the base again to break through. So it's been a very, 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 yeah, which would take us to all-time high levels. But again, they don't have enough steam to do it. So where they got to go? They got to go to the most closest area they can find to reload their position. And it looks like that is that. Let me see what level that is. And that would be basically I'm saying I'll be bearish on the 330 3391 and 3404. So that'll be bullish above 3404 because if that's the case, then that means when we made this low with this pin bar just on the 15 minutes. So this is kind of short term so just bear on that. we would be shorting based on these parameters here. Let me see if they broke the trend. Not really. I would say if anything, that next deviation is somewhere in here. Probably this red candle here. Right? And when we broke through here, oh, we're already coming back to it. Yeah, this is the dance. They're trying their best to use here. You know what? I'm gonna buy some gold here. I'm gonna use that for my leap play because I know this is coming down, but is this area strong enough? Because this made a higher low into a higher high, and this could be the micro trend that's starting this whole entire reversal off of the top of the order block. And we've done that here. We've done that here. Actually, let me use the circles. We've done that here. Come on, not too wide, not too wide. Behave. There we go. We've done that here. You know, I don't want to write text. We done it here. Get there. We done it kind of here, but they went. Look at it. Look, I'm already up 17 ticks. I'm already up 19 ticks. And done it here. You know what I'm saying? Like again, this is not giving us any really credence to go to the upside. This weekly is at its lowest register, but the MACD is tired, and then the monthly looks like this. We're already in the upper register. So on these daily moves at very strong forms, and especially we've used as support, this could be the move that they're trying to get. Yeah, it just needs to hold. It just needs to hold. So I might be just holding this throughout the show and see what happens. And plus, silver has been on a tear. Maybe they're gonna finally reattach silver and gold because they've been so separated recently. All right, let's clear these out and get this going. All right, so let's start with London. It's in here somewhere. This one here. Alright, so that's our London. And then we have our Asian. Looks like it's this hammer candle right here. That's our Asian. Asian session. And then yesterday's New York session would be over here. Got that doji. So that's our rejection that we've not reclaimed or assessed in itself. Okay. ES, for those that plays ES, it'll look similar to NQ, but I know everybody has their preference. It's a lot slower of a mover, a little bit more smooth on getting into your entries without any strong volatility and exposure, because sometimes NQ can be very violent. All right, so that is that one. That's fine. All right, Asian session is right here. Looks very similar to NQ, and like I said, that it looked like we established something very massive for the open range. I was waiting for the break. That 5-minute break was down in here, and I thought of just riding it regardless, but it was like, hey, I was asking for trouble, so I kind of hit the brakes. It was like, no, I'm not gonna do that. Not gonna do that. Interesting. So we kind of like in between two sessions right here. Oh, we'll call that London. So we got the London session under us, and we got the Asian session above us. That's going to be fun. Going to feel like two different order blocks. Let's get rid of all these lines. And our last one we're going to do is the Russell before we get into some of these tickers. We got like 5 minutes until the news drops, and we'll see how the retail sales affects the market. Yeah, right there. All right. That's our London session. I'm sorry, New York session. And then our Asian sessions all the way up here with contract expiration. And there's Asian. And the last one. Right in the middle. Right in the middle of the New York session is our London. And that's that. So we kind of have our levels going into the market. Let's see what else we got here. And dollar. What are you doing, dollar? We can get rid of all these drawings for right now. I'm going to redo this. We already got a def cross here. Probably could use a retest of this 50. And since we're about to cross my 200 into the 800. Downtrend to a downtrend deviation, and we're still kind of like on that. Let's look left. Yeah, maybe a break below here is what they're looking for. You'll see. Because that would be a tough area to break. So yeah, bounce up to drop would be great. Maybe this news will give us a push up and New York push down, just based on the parameters that the dollar needs that help. I don't know, I'm just speculating. Got 1 minute left. Let's get over to NQ and see how this reaction is going to be. Okay, I guess I'm gonna have to just use this button. Let's make it easier. Let's bring it to the 15-minute. Put things into perspective. All right, we got ourselves 1 minute and 17 seconds. So patience, patience, patience. Retail sales. They're anticipating to be down some. Autos, gas, and control group. I don't know what that means. The one I kind of pay attention is the year over year and month over month. Our retail shows, it kind of shows that we don't have no GDP growth. That I would say we've consistently kind of did that for a bit. Flattish to negative GDP growth. 21 seconds. Actually, you know what I should look at? I should look at my gold position with this. Up 23 ticks. Let's get it. All right, that pushed us to like 45. Let's see if we can get some follow through. Come on, get that gold. Bearish for the dollar. So the dollar should be dropping. That means gold should be rising, but we're not getting that. Are they going to just keep on reloading at this order block? Should I give it some time? I had 50 ticks. If you don't know what that is, 50 ticks is like equivalent to like $500. But yeah, most of this information is bearish for the dollar. Import prices, flattish. Export prices is bearish for the dollar. Everything's screaming bearish, or at least majority of it is screaming bearish for the dollar. We bring this over to y'all and see. So last month we did this. They anticipated we won't be that far off, and it was worse. Right? Last year, right? Um, Last month, then there was this. They anticipated that, but it's worse. So, using the U.S. dollar as the currency of the world plays a factor there. And if the U.S. dollar is not strengthening, then boom, there's your uncle. I had 50. Can you get back to 50? That will make things very interesting. Because then that probably tell us we're going to fight right through and probably get through that previous day's orb. We were above the Asian. Hold on. Was this London? Yeah, this is Asian and London is all in the same spot. That's what it was. And our Asian is sitting some or hold on. That's structure. So our Asian is here and we was just above our London. That's what it was. I'm trying to see if we can hold the London. If we can hold the London, then we can attack the Asian. If we can get up above the Asian high, then we could test that 342. And I think this will really round out that bottom again. Yeah, looking good. All right, we'll leave that going throughout the show. We got like about 27 minutes before I get out of here. I probably ended a little early. I got a couple of things I have to handle, but we're just gonna run through, of course, next month's tickers. I'm gonna do it from the weekly standpoint. So yeah, I think I already explained this. Trying to see what Netflix does. Does it come back to the 618? This is Meta. Meta had a nice little pop after our conversation. Let me go over to the daily. Explain what I mean. Nice little pop. Then they pushed up. I thought they were going to get above that 710. You could see there was a little bit of a rejection, and we were pulling that bad boy back. Maybe they come test the gap, coming a little deeper into the 680s again, 690, 680s. They did pay dividends, so that could be the reason why of this drop. But just wait for the oscillators to reset. Maybe you can find a spot. Personal consumption, just worrying about that. Lockheed Martin, again, this pullback is, I'm not trying to be a Debbie Downer, and I'm not trying to, I don't know if anybody's in Lockheed Martin trades and they're like, well, JD, you're saying all this negativity on my trade. I'm just telling you what the chart looks like to me, and I think we popped too far too fast and it needed a pullback. Hence the reason why we dropped off yesterday. Hence the reason why we're up pre-market now. I don't think it goes anywhere. I think they came over here to kind of see if they can get out of the block. I think another bounce could happen like around 460, but 467 too shallow. That makes me think that it might reject that 200 again. So we'll see. All right, we got. Go ahead. We got Microsoft. Microsoft still trucking. I need them to come back and reset and retest this trend line. That's got to be a must. Thank you. Go
Oh,
ahead.
that's all me.
Yes, I and you know that.
I didn't even know your camera was on though.
Okay. I'm in the middle of recording, right? Thank you. Don't have kids. So Microsoft is trying to make its push back down to kind of reset its oscillator. It's a little bit of a work in progress, but we'll see what happens. HCA looks like this, and you know they're gonna come in here because you're in here.
Well, I told her I'm about to get ready for class.
And then Wingstop is personal consumption. Tesla is trying to make that move to the upside. I really want to see this thing come a little bit deeper.
I guess he
Uh,
will.
Upside here, almost like here. Maybe I'll participate in Tesla if it touches this trend line again and show me a reversal. I might. Yeah, I already know I try to stay away from Tesla. Personally, um, UNH. Listen, for all those that love their UNH, I don't know when, I don't know how, I don't know how much time it should take, but if it doesn't get that 334, it's going to go lower. It's going to. They were paying out dividends. Dividends paid out. Here's the reason why it's down now, and then now it's working its way to that downside. IBM again, like this is uh, the forefront of everything that is AI. They pivoted from their, well, they still got their think machines, think book, something like that. They kind of lead the industry in that because they're very durable and rugged. A lot of corporations has corporate contracts with them, and they're very solid. But that just fueled their AI research and everything else. Love that stock. JPM, looking for it to come back down. Don't like where it is. RCL, looking for it to come down a little bit more. I really want this trend line. No, that's not it. Where are you? Is it this one? Actually, you know what? I think I already did it. It already did it, and we crossed over. Actually, I think it did it. I didn't notice it throughout the day. Okay, so we already broke down. Oh, okay. Because it got under it, I was looking for a deeper retracement. We're back above here. Um, kind of what I was looking for was something along the lines of just be lazy instead of me doing levels. I'm gonna put a fib here. I was looking for something like that. Maybe 382, maybe 50 EMA. Let these oscillators reset because we got the bearish divergence. Come down to maybe 618, but don't get there. Like 50% would be great. So probably start scaling myself in around that 221 level, something like that. But I didn't get that, so sitting back and relaxing. WD-40, waste management. I want to cover that. Yeah, told ya, told you about this. You could see T-Mobile just been on this downward decline. I felt like they were going to be coming down a little bit further. I felt like when they paid off their dividends, it kind of made some people come off of it. They're looking for cheaper prices. Look for T-Mobile to bounce off of 211. Boeing has earnings that's coming up in the middle of July. Uh, a nice rejection of a fair value gap. They're looking for support. Maybe the 50 EMA when they finally touch it, it is down pre-market. Apple scares the crap out of me. I really feel like it could get under this block. There was a video I was going over. I gotta release it. I gotta work on those videos. Gotta get on them. I'm gonna do a short on Apple. I was breaking this bad boy down, and Apple looks like it can really have some major moves to the downside. Um, their innovation is questionable. Everything that kind of made them sit at these levels, the stability of the split is not relatively there. I think people are still trading it, and it's kind of a little volatile. So I don't think they have enough shares outstanding to kind of stable this. It's at 14 billion. Um, Hold on. Let's look at something. Let's get our fundamental cap on, because now with everything that Apple's on, they got buy rating here on analysis. All right, financials. There we go. So let's take a peek real quick. Let's look at it from the annual. Losing equity. This 2020. So 65. There were more cash rich around here. Of course, no jobs. That kind of affects the cash equivalency. Let me see. Non-current assets. I want to say their cash sits. Where are their cash? I don't know where their cash is. No, this would be income. It wouldn't be here. It would be. It would be in the balance sheet. It's got to be inside of here. There we go. Okay. I know I wasn't going crazy. Yeah, probably cash hedge. Strength of the dollar dropping makes their valuation kind of come down a little bit. Total receivables, total net inventory. Now that's interesting. Is this saying that no one wants your shit? Oh, so, damn, I'm over here cussing on YouTube. Nobody wants your stuff. It's we getting some high inventory here. Let's break this down to the quarterly. Got some high inventory here. Got a decrease in cash. If I was to spitball, their average cash is just above 55 billion, and right now they're at 48.5. Probably pushing things like their wearables. Prepaid expense, other total current assets, cash and short-term investments. Kind of stable from the cash equivalents here. Let's look at the annual. Kind of stable. It looks like the short-term investments is the one that's kind of fueling that in 2024, and then you could see it's dropping off from 2024 down to here. Very interesting. Okay, so maybe still the cash hedge for the most part. So that's probably what's stabilizing them for the most part. This block needs to hold them, but if you're saying that they're going to return money to shareholders and get this EPS to do something extravagant, increase in revenues. Let's see what their revenues for next quarter is. They're anticipated to be lower. They're anticipated EPS to be lower. If this drops, they're going to need a surprise on this earning for it to pop back up. All right, so you're going to have to work on your products. Apple, you already know this problem. It's all said and done. All right, let's go ahead and speed this up. Restoration Hardware, I already shared a lot on that. CVX, J&J, CVX got a nice little push here. Let's just skip around. Let's get to 3M. This one is trying to get up there. I still think anything north of 148, I would be bullish. Right now, it looks like it's in that lower register. But the stochastic and also the MACD, I don't want it to break any support because it's going to drag this MACD. And I think there's more upside and downside on this one. DR Horton, much you can trade in that one. Zama W. Yeah, that's what that looks like. Higher gas prices. Somebody must have been listening to me at UPS. Yeah, this is your demise. You're doing terrible. You need to hold that 100 level. Looks like we closed at 101. Pre-market we're back down again, but they're trying to work its way back up. And then Starbucks above 95 is what I'm looking for, so I can try to get back into this bad boy. I may take a reversal on it. I did not get into this, but I am now looking to see if I can. It's something very, very long term, something very, very far away. $100 CD. That's the best way to say that. And yeah, we'll start wrapping this up. Let's go ahead and go over AGM. You know, like the reason why me and GM sit in a very harmful relationship, I guess, is very volatile. I had GM when I was a young trader. I bought their shares. They had a lot of government contracts, and when the housing bubble happened, these mofos were not bailed out, and somehow the government owned GM, and they filed bankruptcy. That's how they saved them. That was their bailout, and the government still got all their cars from them because, of course, they didn't go out of business. They restructured, and they came out with a new ticker saying basically sending the birdie to every investor. So I've always watched it to kind of like short it, but they got so much shares floated, it's hard to trade that bad boy. Kind of like Ford. If you ever played Ford before, it's got to be already in motion, or you're gonna be sitting on contracts for some time. Kind of like that game with that. So since recently I didn't see anything spectacular, I had added on the list because they were going into the EV space. It is a terrible. So I just don't want to even see it on my watch list anymore. SoFi is right there. Looks like they finished green yesterday. Everything finished green for the most part. So we'll see how everything goes. That said, I got a couple things I got to run out and do. I want to kind of give y'all a little bit of insight on just market psychology. I'm going to just end it there. Yesterday was a very interesting dynamic. I even did like a little bit of a blog video for myself, which later on when I start to do the books and all that, I'm probably going to use it as a sense of assessment or whatever. But the problem that I was facing was that yesterday I did well on my property valuation, right? And it was all based on my standard structure, opening range, with my market dominance, mixed in with a little bit of Pac-Man got 'em, and just doing what I need to do so that I could be able to do so. But the problem that I was facing was that I wasn't doing anything, and I wanted to kind of like figure out, okay, what am I going to do next? Like I'm a trader, right? And it was 2 o'clock, and I thought about taking another trade, and the first thing that popped in my head is something that a good trading coach brought to my attention, and I think it's the last hurdle in my life, right? And he was saying that, what exactly are you trading for? Are you trading because you're bored, or are you trading based on certain parameters, whatever the case may be? And I think I was trading to be bored, right? And 2 o'clock comes in, and I normally trade on 2 o'clock, but I already reached my goal for the day. So here's a little insight for y'all out of this long drawn out conversation, right? At the first part is this: if you find that you're trading because you're relatively bored or whatever the case may be, I would say ask yourself how far away you are from your goal. If you're like 80 to 99% away from your goal, I would strongly suggest just shut it down for the day, because it can be you chasing that 100%, and then I don't know where you end up, giving back 40%. Now you're only 50% up for the day. That can really play with your psychology. And because I already hit my goal and then some, I'm probably like maybe three, maybe four folds. I just said, no, I'm not going to get another evaluation. I'm not going to touch my PA. Not going to touch options. Well, options, I kind of missed the boat a little bit on it, so that also made me probably think outside the box a bit. But just shut it down, especially with 99%. Please move. These kids. It was a perfectly good video until they just want to interrupt it. Anyways,
Well, then just stay back.
like I said, at the end of the day, you want to be able to focus on what your goal is. It's the Thank you. You want to focus on what your goal is. And if your goal is to make money, then have your targets, just like you have your targets in the middle of trading. So if your portfolio has a target, then you'll stay disciplined. And if you're close to 80 to 90% of that target, then you're winning. So without further ado, I'm going to go ahead and bid y'all fond farewell. See y'all tomorrow at 8 a.m. You have a great day.